right, guys. Hey, welcome to the SkyPoint Base Shop Call. My name is Stephen Yee. This is the week where we have Integrity Partner. We also call him the king of mortgage protection. If you ever watch anybody sell mortgage protection in our company, you should watch Frank sell mortgage protection. It's the best in the entire company. And he's going to be sharing today with us how adding annuities into your weekly sales will keep you profitable, but not only that, how to find them as well. So Frank, thanks for hopping on and being able to share with us. This is our base shop. So a lot of new agents on this call learning how to, write this with, final expense and mortgage protection. So thanks for having us on or being on with us.
Thanks for having me, man. I appreciate it. This is exciting.
So for those of us that don't know you yet, what was your background? How'd you find Family First Life and the insurance thing? How is that all about?
I was actually in the mortgage business for 10 years. Jamie and I owned a mortgage company in 2008 and 9. We went from making $500,000 a year to $35,000 a year. And
wow.
We lost everything. She actually found insurance. She was my upline at the last company we started at.
Nice.
So yeah, no doubt. But
cool.
we've been here since day one.
I love it.
Since day one.
So you ran a lot of mortgage protection appointments. Obviously your background was in that. Today's topic, and thank you so much, by the way, for taking the charge and leading us with the simple retirement solutions. A lot of new agents are, I think, they're nervous about annuities because you're messing with someone's retirement. It's a more complex sale because the paperwork is forever. Some states you got to get extra certifications. Why should new agents learn how to add annuities into their wheelhouse?
Well, I mean, a few reasons. The main reason is it's the best way to serve your clients. I mean, if we're going to serve your clients right, then serve them right. Meaning you wouldn't go in there and if they were looking for, let's just say, mortgage protection and then burial protection as well, would you just write the burial plan and not write the mortgage protection? No, you would write them both. And so I think if we're going to service our clients the best way we can, the best way we should, then adding annuities is definitely the way to start to do that. The second reason, Stephen, is as far as persistency, dude, it's a huge deal on persistency. Now, you're not going to write an annuity in every home, but the clients that you write a life policy with and you write an annuity, they're never going to cancel that life policy. I mean, and you should never say never because it freaks people out. But 99.9999% of the time, they're going to keep that policy with you forever. That makes people feel better. So it's a way to build trust, and it's a way to keep good business. And referrals are crazy. And 5% of $100,000, which is 5.25 is the lowest in annuity comp, and you're not there very long. It's $5,250. Like I don't how many it's 5.5, 6 life apps to copy the one commission that you're going to get on an annuity. So for me, I was the same way. I wouldn't say I was nervous because guys, and I'm going to go, since this is a newer group, this is good. I have a basically a one-on-one training on annuities, but once you understand how they work, they're so simple. I mean, you really don't need to know much other than you can't lose a dime. In fact, you give me $100,000, Stephen, it's going to stay at $100,000 unless you spend your money, no matter what the market does. It could be down for the next 15 years and you're never going to lose a dime. And that account balance will still be $100,000 unless you decide you're going to spend that money. That's pretty much all you need to know. I mean, and we'll get into a little more depth of explaining it, in a way that people understand it and that makes you sound like you understand what you're talking about. But you don't need to be a financial guru. In fact, they don't want that. Our clientele, if you haven't noticed, we're not dealing with wealthy America. We're dealing with middle of the road America, sometimes lower income America. And they just want somebody that's going to talk to them and not make them feel stupid. There's nothing worse than someone's trying to explain something to you and you only understand like every fifth word. Right. So it's like when people try to tell me about computer stuff, I'm going like, it's literally like they're speaking Japanese, right? I can't even fathom what they're saying. And so I think a lot of times people get intimidated by that. because the training we used to have, and listen, if y'all, if any of y'all know who Sean Ruggiero is, he's a very intelligent guy, but the way he explained things, I would go, that I could never do that. Like,
Right.
it's not me. It's not who I am. But what I realized was I didn't need to be him. All I needed to do was get people to understand how they worked and then have them trust me, and they were golden. So I'll share my screen because I think this will be helpful. And
Please do.
if you guys were at the if you guys were at any of the spring sales conferences, then you saw this. But to me, it's so simple. Let's see if this works. Do you see that?
I do not see your screen.
Oh, there we go. How about
There
now?
you go. Yep, perfect.
Different types of annuities?
Yep, see it.
Is that what it says? All right. So here, this is a 10-minute presentation, and at the end, hopefully you guys be like, oh, I can do this. There's 3 different types of annuities. You got a variable annuity, which works just like the stock market. Your money can go up, it can go down, it can stay level. You have fixed annuities, which are kind of like CDs. The rate is fixed 2, 3, 4, 5%. It never changes no matter what's going on in the market. And then we have indexed annuities. FFL sells indexed annuities. You, with your life license, have the ability to sell indexed annuities. Now, there again, you were mentioning some states where you might have to get some different certifications, but it's not like a Series 6 or a Series 7. It's just a life license, maybe with an annuity, a special annuity certification in some states. I think Virginia is one of them. There are a few of them. But we sell fixed index annuities, which means we're not licensed to lose people money. It's the best way to explain it. Here's and when I would sell annuities back, and I haven't been in the field in over 3 years, but when I was in the field, we would print our leads out, right? And I'd have my stack for the day, and I would go into the home with the lead, and I'd flip it over, right? Well, when I explained an annuity, it would look just like this. I would draw a line, literally like this blue line going up, and I'd say, Stephen, when the market's going up, your account's growing. Here's the cool thing, Stephen. When the market takes a dip, and it will take a dip, we have an airbag pop out, and it just makes your money stay level. Okay. And then when the market starts to grow again, your money is going to grow. And when the market dips again, that airbag will pop out again, and your money will level off. So you're either making money or you're staying the same. You're stepping your way up to where you want to get to. Does that make sense?
Yes.
And everybody goes, yeah, because that's not complicated, is it? Like a kindergarten kid could understand that. And this is what I drew on the back of every lead when I sold an annuity. And at the end, they would typically go, they would say 2 things. 1, like, how do I get signed up? Or 2, it's too good to be true. So if you can draw this little illustration and talk to a client just like that, 90% of the time, they'll be good to go. Okay. What are the benefits of an annuity? They protect you from probate court. They protect you from market risk. It can provide lifetime income. So we have different types of annuities that will either just grow if you're looking to have that money accumulate at a fast pace and a maximum rate. We have cash annuities, and then we have income annuities. That's the 2 different types of index annuities we typically sell. So if somebody's looking to grow their money safe and then eventually turn it on to take income like Social Security or some type of retirement, you can add an income rider where when I turn it on, whether it's 60, 65, 70, it's guaranteed to pay me that same amount till the day I die. Whether I'm 100, 110, 125, you'll never lose that monthly payment or that monthly income. And that's if you poll seniors, their biggest fear is running out of money. And you would think most of them would be of dying, but they're not worried about dying. They're worried about not having money and still be living. So lifetime income is a huge benefit to annuities. It offers a cash bonus. Most of our plans offer anywhere from a 5 to a 16% bonus just for rolling your money from a 401k to an annuity or a savings account into an annuity. Tax defers. It will keep your money in the tax deferred status. So let's just say I worked at Google for 20 years, and I had a 401k, and I leave Google and go work for Microsoft. Well, instead of rolling that annuity into another, or rolling that 401k into another 401k with Microsoft, maybe I put it into an annuity. And let's say I'm 40 years old. Well, that's tax deferred money, which means They took it out of my paycheck prior to me paying taxes on it, and it goes into this account and it stays tax deferred until you start drawing it. Okay. If you take that money from that 401k and roll it into an annuity, it will continue to stay tax deferred. So essentially, the best way to explain it is 401k, a 403b, they're just tax codes. So whatever code your money had before it gets into an annuity is the code that it will hold while it's in that annuity. Does that make sense?
Yes.
So if it was a Roth IRA, which is 100% tax-free, it'll be a Roth IRA and an annuity. If it was a 401k, it'll be a 401k status and annuity. And you don't have to touch that money if you don't want to until you retire or until you hit 70 and a half, when the government says, you know what, we've let you defer taxes long enough. You have to start taking money out of this account because we want ours, right? So they make you start taking withdrawals. So you start claiming income taxes on that money and you start paying taxes. So those are the main benefits to annuities. Types of money you can roll: 401k, 403b, IRA, Roth IRA, cash, TSP, CDs, savings, inheritance, any type of settlements. You guys see those commercials from gosh, there's these companies that buy out settlements and give you a lump sum. Some settlements are set for, to be paid out over time. They used you to take any type of money people out under the mattress, safety deposit box. If you're not asking the question, you'll never know. But these are the main types of money that we move. And 401ks, 403bs, IRAs are the main ones. Our ideal client, and I don't really want to put a label on this because it doesn't matter. I would say the more, if we did a poll on the amount of client or the age bracket of the clients we had, I would say it's probably above the age of 60 or 59 and a half, just because it makes it a little bit easier to move money. But I don't want to say that's your only ideal client, because again, you could be 35 years old and you could have gotten an inheritance from your grandparents, or you could have had a 401k and left that job and it could be just sitting there. I mean, so you ask the question, everybody, but we say 59 and a half years of age or older because those are typical clients that are looking to maybe protect their money because they're getting closer to retirement. Anybody with a retirement from a different job. So again, if I leave one company and go to the next, that money's eligible to be rolled into an annuity. Anybody that received an inheritance or any type of settlement, someone has the ability to do an in-service distribution. So this was put together to be not confusing. So I'm going to try and make it not confusing because I'm confused easily, if you can't already tell. But an in-service distribution essentially is if I have a deferred retirement account with my employer, and that could be either a 401k, an IRA, a 403b, a TSP if you're with the government. In-service distribution means just that. I'm still working at that company and I want to take some of my money out of my retirement account. Some companies allow it, some don't. The 59 and a half, the government put in a law that you're allowed to, because anytime you take money out of like a 401k or 403b and you're not 60, you get penalized 10% because it's tax deferred money. So on top of the taxes you're going to pay, they penalize you for drawing it out early, right? An in-service distribution will allow you to move that money into another like account. So if it's still qualified, there is no penalty, and they'll allow you to do that. If 59 and a half, the government said, you know what, people are getting close to the retirement age. We want them to be able to take their money out of a riskier account, like a 401k, and move it into something a little more secure, like an annuity. Because what happened in 2008, if you all know or remember, there were people that were set to retire in 2009, 2010 that lost 50, 60, 70% of their net worth. Just like that. And I mean, if you paid attention to what's going on in the market over the last year and a half, 2 years, it's scary, similar. It's not quite as bad as in the stock market as it was in 2008, but people are down 40, 50%. So those people that wanted to retire in 2010 that got smoked in 2008, they wound up working till 2013, 14, even 15 to recoup that money, because they were projected to retire based off of what they had now, not knowing that in 2008 they were going to lose 70% of what they had. So this 59 and a half years of age mark is something that people should be looking forward to, because they can pull their money out and protect it from any type of major risk. Does that all make sense? So that's a big deal. And then any type of person with significant savings, like I said, some older folks. I'm Italian. My dad. It's an interesting culture, to say the least. Italians have cash like under the mattress, stuffed in the wall, everywhere. So like anybody that's got a lump sum of cash that they want to protect, and the only reason they don't put in a bank is because they don't trust them. Not to say they're going to trust insurance companies if they don't trust banks, but it's a better option where they can make money and there is no risk. So those are your types of clients that you're looking for. How do you find clients? It's very simple. And this is where I know, Stephen, we're not doing. FFL on a weekly basis, on average, has 7,000 agents issue pay a life insurance app. Out of that 7,000 agents, only 100 write an annuity. And that number should be probably closer to at least 50%. And if we're being conservative, let's say, okay, 7,000, 2,000, 1,500. I mean, we literally could go to $1 billion the rest of this year if everybody at the company decided they were going to ask this question, which is, first of all, you guys using the financial intake or the client intake sheet, right? I think everybody at FFL uses it. It's the sheet where you fill out the information on your customers and you ask the question, what do you have that acts like life insurance? IRA, 401k, 403b, TSP. That's what I say in every single appointment. And if they say, I have a 401k, you just say, perfect. Roughly how much do you have in there? 250 grand. Perfect. And then you make a mental note and you move forward in your appointment. Okay. But you can't find that money if you're not asking this on the client intake sheet. You can't get to part 2 of this if you're not asking that on the intake sheet. So once you get through your application, you at the end go, all right, Stephen, if I could, I remember you saying you had a 401k with about 250 grand in it. If I could show you a way to take advantage of the upside of the market, but eliminate all downside risk, meaning you can't lose a dime, would that be something you'd be interested in learning about? It's really that simple. I'm going to repeat it again. If I could show you a way to take advantage of the upside of the market, but eliminate all downside risk, would that be something you'd be interested in learning about? It's really that simple. And most people will say yes, because you're just asking if they want to learn. You're not asking if they want to buy it. Do they want to do it? Can they, can I show you illustrations? No. Would you be interested in learning about how this works? If they say no, they're not real smart. Like, who doesn't want to learn something they don't know? So once they say yes, you take all that information, you try and get as much as you can. You already know it's a 401k. You already know it's roughly 250 grand. If they have a statement, you want to ask them for it. Then you're going to go to, I think I'm jumping ahead of myself, but I'll come back to that. You're going to go to fflams.com, or I think they changed the website just recently, but fflsrs.com, or you can go to the ILC Ask a Specialist button here, or you can go to the Advanced Market Sales or the SRS page and go here. You're going to click that button and simply just fill it out. It's going to ask you their name, their age, how much money they have, if it's qualified or non-qualified, the difference in the two. This is how I always remembered it. If it's qualified, it means the government's qualified to take that money in taxes. If it's non-qualified, they're not qualified to touch my money. It was the easiest way for me to remember it. Anything that has not been taxed yet is qualified. Anything that has been taxed after tax savings is non-qualified. Okay. They're going to ask you that question. They're going to ask you, what are their short-term goals, long-term goals? Are they looking for lifetime income? And then on the Ask a Specialist page, there's 3 options. Okay. The first option is, I know nothing about annuities. In fact, it makes me nervous to even say the word annuity. I would love somebody to do this for me, and I can just watch and learn, and I'll give them 50%. We'll do a 50-50 split. That's option 1. Option 2 is, I know enough, but I need some help. And if I'm in an appointment, it'd be comforting to me to know somebody was on call, and you can have somebody on call with you to walk you through the illustration, answer questions while you're in the appointment, help you get the thing through suitability, get the funds moved, all that stuff. And it's a 90-10 split. You're giving somebody 10% to be there to help you, but they don't need to do the whole thing because you have some sort of idea what you're doing. Then the third option is, no, I know what I need to know. I'm just not sure what product to write. And they'll send you the illustration, the application, and then they'll send you bullet points on what the most beneficial parts of that policy, or what is the most beneficial part of the plan they're offering is, whether it's lifetime income, whether it's no caps, whether it's no fees, whatever that would be, will be on that bullet point sheet. And you can simply go through what the best benefits of that annuity are with your client, the illustration that they tell you, and then you can write the app. And that's what Ask a Specialist offers anyway. What we found out by doing this is a lot of companies that are big annuity producing companies do a lot of splits with agents. And right, wrong, and different, there's not a ton of overrides in annuities. So a lot of managers don't talk about them because they're not going to get paid. And again, I think it's wrong, because annuities saved me more times than I can even count. It always seems like every time I was cash tight, or I got a big chargeback, big roll up, that an annuity would fund and make me cash flush. And it was life-saving for me. So I think it's good to have somebody that knows what they're doing, that says, you know what, I'll do it all. No worries. I'll run the illustration. I'll present to your client. I'll fill out the application. I'll watch it go through suitability. I'll request the money. I'll do all that needs to be done from start to finish. And you can just watch and learn. Dude, it would only take 1 or 2 times for you to see that, for you to feel comfortable pitching an annuity. Because again, they're just not that complicated. In fact, if you've ever written an IUL, I think they're more complicated than annuities. There's a lot more moving parts and death benefits and all that stuff. So that's how you go to Ask a Specialist. And those 3 options aren't bad. I mean, to do a 50-50 split, to have someone do all that for you, to me, in the beginning would have been really good. Because the first annuity I ever wrote was on my dad, and the guy that was giving me advice didn't know what the hell he was doing. So I wound up putting my dad in a plan that wasn't the best plan for him. Now it's an annuity, so he never lost money. He definitely made money, but he could have done a little bit better had I had somebody that knew what, was all relevant at this point in time. And that's what you guys have with the SRS team that's running this stuff, is you'll get connected with a top annuity producing agent that knows definitely what the products are, what the best product is for each scenario, and they know how to close as well. So if I'd had something like that in the beginning, my dad would have been in a little bit better situation. Again, not that he's in a bad situation, but it would have been a little bit better as far as the lifetime income goes. They could have added my mom as a spousal rider, where she could have had that money last for her for the rest of her life. So again, things that you don't know because you're just new, having somebody walk you through it is really good. So the other question you guys should be asking, which will lead to annuity money or IUL money, is the silver question. Do you consider yourself to be a spender or a saver? If they're a saver, more than likely they have some sort of money saved that you might be able to put into an annuity. If they're a spender, they don't save, they need to start saving, they might be a good candidate for an IUL. So this is another question that you guys should be asking every appointment, because again, if I can write 3 apps in one home, that's one place, right? Back in the day when we used to have to drive, I know it's a lot telesales now. I could only drive to 8 to 10 appointments in a day because of Baltimore traffic and things like that. But if I could get to a house and write 3 or 4 apps in one home, hell, I mean, that's like me driving to 4 or 5 houses because they're getting 3 or 4 in one. So ask the silver question as well. And again, I think I went over this. What do we need to know? What do we need to know to help you? How much money they have? Is it qualified, non-qualified? What are the long-term, short-term goals? And do they have a statement? That's pretty much, so this was the presentation. Okay. Now we can open it up to some questions, Stephen, but I think none of this really matters if they're not asking that question. And I think we start by going, you know what? I'm going to ask the question to every single home. Dude, if you find something, call Steven. He knows what to do, right? Like, we're more than happy to help you. And the SRS department was put in place for teams that have managers or people that don't know how to write annuities. So by all means, like if Steven knows it and wants to help you, I'm sure he does, reach out to him. But ask the question. If you can put an extra, 10, 15 grand a month in your bank account, why the hell wouldn't you? You know
Right.
what I mean?
Dude, the average SRS case I wrote was about 250. And so you look at that at a 5.25 commission, which you only do there for your first policy, right, Frank? Because the second one you write is automatically at 6. So like you
And
look
then
at
you're at
that,
6.5 at 500,000.
right. And so like you look at that, it was like an average of like 18 to 20 grand. And by the way, for people that don't understand how the annuity money works, after 30 days, it's non-chargebackable unless they die in the first
Unless
year.
they drop that, that's right.
Right. So like it's not like life insurance where like I write the policy, I got to pray and hope that it's going to stay on books for at least 9 months to a year. It's only 30 days with SRS. So, you know, one of the things that you said, Frank, that, and I'm so glad that we're doing this as a team at FFL now, is the splits, right? Because, you know, so many agents, number one, they're nervous about it because they don't want to botch someone's deal. They don't know what questions to ask. They don't know what the applications look like, what indexing strategy. See, the beauty of it is so many people, they have an ego. They go, I wanted to offer myself. Dude, I'd rather take half of something than all of nothing. And like, let's just say I'm working with Frank. I'm a brand new agent. I have a client. I ask the question, right? What's really simple is, hey, do you have anything that acts like life insurance with a beneficiary attached? They say, I got a 401k. I go, cool. How much would that be? You know, if something were to happen to you right now, 200 grand. Awesome. I do nothing with it. I ask a simple question at the end, like, hey, would you be interested in learning more about how not to lose money in the market? They say yes. And I just take that information to Frank. And Frank goes, dude, I'll help you with that. I go, hey, client, next week, I'm going to bring one of my senior managers with me. He's going to help assist with the process. And I sit and watch. And guess what? I'd rather get half of that deal than all of nothing. Right. And then after doing a 1 or 2 or 3 max, because you don't really need that many, then you might need help with illustrations. Sure.
Right.
But like,
and even then, if you're at the 10%, right, you go, all right, I'm done with the 50, but I'd like to have Steven on call, you know, for sure, where I know he knows I'm in this appointment. I mean, okay, 10%, no big deal. And eventually you get to the point where you don't need anything except an illustration here and there.
Absolutely. If you guys have any questions, feel free to drop it in the Q&A or the chat. But, you know, Frank, one of the things that, you know, I like to say when I was writing annuities too, is I would be like, hey, Frank, let's say you were able to play God and the market does 3 things. It can go up, it can go down, or it can stay the same. Which one would you take away? They're like, going down. I'm like, cool. That's what annuity is. They're like, really? You know what I mean? And it's like just making it simple for people to understand. And so that they can go, I can do that, right? Because you take a complex idea, you make it simple, kind of like what you said, Frank. Like a lot of our clients, unfortunately, majority of our clients are middle America, low income America. So like they don't have financial advisors. And this 100 grand, 150 grand that they have in their 401k is all they got. It's not like someone that has an investment account here, money markets here, CDs. They don't have multiple things. This is all they got. And they just want someone like us to be able to shoot them straight and make sure that they can't lose. You know, and one of the things that I used to share with our clients too was, hey, the difference between me and someone that actually invests money is they have a legal license to lose you money while I don't. I'm like, ask me how much money a fixed index annuity has lost in the last 100 years. They're like, how much? I'm like, 0. Don't you like those odds? You know what I mean? So Jenny asked, she said, what was the name of the site for help with the annuities?
Let me see. I think they changed it. Let me just confirm. www.fflsrs.com. Oh, www.fflams.com. It's probably still fflams.com. Takes Integrity a minute to switch websites because I've been through that. Or again, you can go to the ILC and there's the Ask a Specialist button all the way at the bottom. So FFLAMS Apple Mary Sam.com, or you can go to the ILC and click on it there. And you got to register for an SLS account or an AMS or SRS account. But once you do that, you can log in. And there's a lot of videos on there too.
That's what I was going to say.
Listening to you talk, I'm going like, dude, that's and we've all used that up, down, which would you eliminate, or the old blackjack deal. If you could play blackjack, but every time you lost, you kept your chips, and every time you won, you took the dealer's chips. Like, how much would you bet? I bet all of it. Yeah, that's what an annuity is, right? You can't lose. So, and the biggest objection you ever get is it's too good to be true. How can they do this? And the simple answer is, well, insurance companies have what you and I don't. They have all the time in the world. They're not going anywhere. So they know over a 10, 15, 20-year period, it's going to return 8 to 10%, and they're good with that. I had clients in 2017 send me statements, 21.5% return. Like, blew my mind, because Athene has no risk, no caps. And if you do the regular performance lead, no fees. Dude, there's not a financial advisor that can beat that.
No.
They might be able to, they give them uncapped strategies, but then you got uncapped risk as well. You definitely aren't going to go feeless, because that's how they make their money. Why would they ever go with those guys as opposed to us? We have the absolute, in my opinion, the best retirement plan for if you're young and you got 30, 40 years before you retire. Okay, play the market. It's a great thing. You can make big, you can, win big, you can lose, but you'll have time to recoup that. But if you're 40, 55, 60, 65, and you're getting towards that retirement age, why? The question you used to ask is, how much of that are you willing to lose, Steve? That 250 grand you have, how much are you willing to lose?
None of it.
None. So what are we even talking about? It's so simple, guys. And again, you do one or two, it's a wrap. You'll never not write them. You really will. You'll never not write them. And I think we're going to take over this FFL annuities going to take over the way IULs have. And these are a lot easier than IULs. There's no medical underwriting. And again, they're non-charge backable. So it's like, dude, I've written probably, I don't even know how many annuity clients I've had. I've had one cancel. And the only reason that one canceled is because their advisor absolutely lied to them and told them they're going to have to pay taxes on the entire amount they transferred, when that was 100% false. But I couldn't get the guy back on the phone because the accountant told him to block me or whatever. But it is what it is. But one out of 300 or so, you know what I mean? Like, that's pretty good odds.
Absolutely. Frank, the other thing that people always ask, she's like, do you run annuity leads and that stuff? And I laugh because I never had one, you know what I mean? So how did you find your annuities for the new agent to understand?
100, other than my dad's, 100% of them were through mortgage protection leads and final expense leads. And I bought annuity leads, $200, $300, $400 a pop for a lead. And I bought them for the ones, I don't even know what the name of the company is. In fact, I still get text messages. I didn't sell one annuity. And I probably spent, so I did it for a year, and I probably got 10 a month. So I'm thinking I spent 12 grand or so. You know what I mean? It actually more than that. It was probably closer to 40 grand. And the thing is, because I didn't have that relationship with them, from helping them with their final expense or their mortgage protection, I was just another financial guy. And it's tough to build that trust like that unless you can get in the home. And it's hard because those people don't want you in the home. They're really just shopping it out. They're digging for information. And again, they're going to talk to 3 or 4 people, and you might not be the one to do it. And like I said, I don't have the patience to follow up with people a million times. So I know what we offer and how good it is. If you want my help, I'll help you. If you don't, there's plenty of other people out there that need my help. I never chased anybody.
Absolutely. Cindy asked the question, why would an individual who has a non-qualified money get an annuity if they have to pay taxes anyhow? If you have, let's just say you've got 50 grand in the bank, and you put that 50 grand in Robinhood, and you buy Apple stock, and you make 100 grand off of that 50, you're going to pay capital gains on that 100 grand. Yep.
So if you make any money on that money, you're going to pay taxes on it anyway. So why wouldn't you put it in an account where you're going to make money but never lose? That would be the reason. It's again, probate court, nursing home spend down. A lot of these plans cover your money from that. And I didn't get into that because certain states, and there's look back periods. It can get, I don't want agents going in going, hey, this will protect you from nursing home spend down when they got half the foot in the nursing home and half out. Like, it's not going to work that way. So a lot of times we don't pitch that right, but a lot of these annuities can protect your money from that. And my nephew just got married 2 years ago, and he got married in September. 2 months later, his wife's dad was jogging, and just they don't really know what happened. They found him in the middle of the road. He hit his head so hard he was in a coma for 12 months.
Oh, wow.
And then he was in a rehab center for another 6 months. But they burnt through it, like burnt through the savings. And it was gone literally in like 6 months, because those places are not like 20, 30, 40 grand a month. So if you think about it, 6 months, that's 250, 300 grand. He was a high school principal. So like he wasn't loaded. I mean, he put a little bit of money away, but it's gone. And I'm thinking like, wow, if he'd had if he'd had his money protected, that wouldn't have happened. Maybe we had some long-term care plan on. There were so many things I look at that could have helped him in that scenario. But yeah, that's the reason is you work so hard for your money. You don't want to have something like that swipe in and then just take it all, because that's the way it works.
Yeah, absolutely. You know, it's funny, Frank, I have an annuity appointment today from a guy that I've sold 3 annuities to, by the way. He was
Nice.
a final expense lead, and he never bought final expense for me. Instead, he kept asking me what he can do with his money. And so I've written him 3 times, income and annuity, 2 performance elites. He calls me last week and he goes, hey, I have 50 grand laying around. I want to do something with the money. And I was like, okay, cool. I was like, spend it, and he was like, well, the 50 grand in the savings account does nothing. It makes what, 0.00001% interest.
Right.
It does 0 value for me. And I'm like, absolutely. He goes, I'm actually losing money with inflation. I'm like, correct. And he goes, but if I put it in the market, I have the risk of losing it. I'm like, yep. He goes, what would you do? I'm like, you just described what you wanted to put it in, which is another annuity. Because you can participate in the gains, but you will never lose.
Right.
You'll always perform better than a savings account, because the minimum guaranteed value is still like 4%. So it's so much better than that. And so, Cindy, that's the reason why there's so many advantages of having it, even if it's non-qualified and you have the money in the bank, it's still better than leaving it in there. And just so you guys know, banks can borrow what, 7 to 8 times the money that they actually have on file, right, Frank? While insurance companies, they have to be solvent, which means they can't lend out what they don't have. Insurance companies, so it's way more, secure, I guess the word, than a bank would be.
So it's 36 cents of every dollar is required to be, is what the FDIC requires banks to have on hand. So if every customer at let's just say Bank of America went to the bank and drew all of their money out, they couldn't. They couldn't. They'd have 36, because like you said, they lend out money. Insurance companies, for every dollar they collect, they have to have $1.03 on hand. And Athene's solvency rate is like 111%. So they could, every single customer they have could come collect all of their money, and they'd still have an extra 11% extra of what they'd be able to pay out 111% of that. So yeah, 100%. And there was just a comment up there. My dad said annuities are complicated. No, they're really not. They're really not. Like, there's not much to know. And in fact, if you don't want to research all the different fund options, you could take and put 10% in every single option there, and you're still fine. Because at the end of the day, no matter what's going on, your money is never going to go below that floor unless you spend it. And that's how you explain it. And just keep it simple. Keep it simple. And again, Jenny, if you need help with your dad, I'm sure Stephen will help you. If he's not available, I'll help you. That's what my job is now, is to try and grow this annuity side of the SRS, because we're really failing miserably, failing. And especially the way the economy is right now. I mean, people are looking for something to save their money and not have that risk.
Absolutely. And I'll share one more story before we go to the last question. My wife is an agent now, Frank, and she's been selling. She's been protecting 20, 30 families. And so her parents were going to go buy a home, and they had excess cash laying around, and the lender's like, we need some proof that it's going to generate some type of income. And so I told them about 2 years ago, hey, roll it into an annuity. It's like Social Security, you'll get a check forever. They're like, that's stupid, right? Whatever. The real estate agent tells them, and they go, that's a great idea. So my wife rolls the money over to Nassau Re, who has a phenomenal income annuity with us. And so I was like, oh, based on the paperwork, I think you're going to get like $1,800 a month. And they're like, okay, that's great. Couldn't find out Nassau's been sending them $2,100 a month for like the last 7 months. They're like, not only that you pay more, it will last forever. Even if the money burned out, because there's an income rider attached, they have to pay until they die. And I'm like, dude, now they're telling everybody about how phenomenal this annuity is. So like Jenny, like one of the things too is like a lot of folks that are older, they have like the bad products in their head. You got to show
Mhm.
what the new things are. It's kind of like, you know, the cars in the 60s are nowhere near as good as the cars now because they updated with technology and all that stuff. So like the FIAs that we have nowadays are so amazing, so amazing.
Mhm.
So and so last
Especially the
question.
caps and stuff. The
Yeah, like
caps and you know, prior back in the day, caps were 3, 4, 5% max, right? And now with Athene, it's unlimited. And I think a lot of the older generation looks at annuities as variable. They don't or fixed, right? Variable fixed. They don't have any idea of what this index annuity means. And it's just misinformation. That's all. All you have to do is educate them and say exactly what you said. Things have updated, you know, over the last 10, 15 years. It works a little bit differently the way it used to work.
correct. So last question from Lexi is, what is the smallest amount someone can start with an annuity? And can we get a copy of the slideshow that you did earlier?
Yes, I can send it to you, Stephen, and you can blast it out.
Cool.
10 grand, I think is the minimum with most companies. There may be one that takes 5. I know F&G has a monthly funded annuity. It's not a single premium, so you can pay into it every month, which is pretty cool.
Right.
And we have a lot of guys, actually not a lot. We have a couple guys that are, you know, writing IULs, and when they get an IUL client declined, they'll take them to F&G and start funding an annuity, right? So that's a little bit, but if you want to do a single premium, one lump sum, I think it's 10 grand. You can correct me if I'm wrong,
That's
but that's
correct.
usually whatever. Okay.
Yep, that is correct. So, guys, I dropped my email in there. So if you want to email me, I'll go grab it from Frank and forward it over to you. So, Frank, I appreciate you, man. I seriously do because, you know, this stuff is fun. And it's like one of the things that I learned early on was like, you know, I'm not taking a shot at teachers, but like teachers can take a simple concept and make it very complex, while educators can take a very complex idea like an annuity and make it very, very simple for us to understand, kind of like you. And guys, if we do this with our agents, you know, simple, that old phrase, keep it simple, stupid, right? Like it makes sense because people will, if a confused mind does nothing. And so if you want to use all these big terms and confuse your clients and try to make yourself sound smarter than you are, it's not going to move. So like keeping it simple, letting your clients understand, they'll trust you and they'll move on with you. So Frank, I appreciate you, brother. If there's anything I can do to return the favor, let me know. And we'll get this recording out, guys. Thank you guys so much. Have a great one.
See you guys.